only lose money when you sell, right? You only lose money when you sell. That is a common thing that you hear a lot with the stock market, investments, and all of that. And I used to be one of those guys. Like, I always used to think, like, I had some sort of ego where I'm like, I can't sell at a loss. I'm only going to sell at a win. Like, there's so many people where they, like, if they're losing on an investment, they wait until they break even if it takes multiple years for it to get back to break even, and then they sell. I actually think that is pretty damn terrible advice, because what you're actually doing then is you're selling your winners, right? You're cutting your winners short and you're riding out your losers. I don't believe that's the right mindset. And what it actually happens in terms of like taxes as well, if you're always cutting your winners, you're always paying capital gains tax, especially if you're like in a country like myself in Australia. Like, you got to be really, really careful with that type of stuff. And it's gotten me bad in the past. Like, I've had some proper six-figure tax bills in the past, which really honestly reset me back to zero. And actually, I've been in the past, where I've been negative because I thought I was making all of this money. But then when I came and did my taxes, I'm like, oh shit, the capital gains is that large. It makes no sense. So this time of the year, right? So it's like getting March. For us in Australia, our end of financial year when we have to do our tax returns is at the end of June, start of July. That's when we have to start thinking about this stuff. Well, that's when the financial year ends. So roughly around March and April, this is the time when I start looking at my portfolio and I start wanting to cut the losses. I think, hey, 9 months has been quite, 9 months or a year or whatever it's been, that time frame. That's been long enough. If my positions are still in a loss, there's a chance that, hey, like, I was actually wrong. Because, like, whenever I place an investment, my mindset is that, hey, I'm placing this investment. I'm pretty sure I'm going to start making money in the next month or so. Otherwise, why would I place it? It makes no rational sense, right? So if after a year or so I'm still sitting on a loss, I then have to think, all right, would I take the investment or take the trade or whatever you want to call it? Would I take it now based on where it is on the chart? If the answer is no, I want to chop it and I want to potentially move it to something that I believe would actually be faster, because that's the way like you're actually doing tax loss harvesting, right? Your losses can offset your gains and it can reduce your tax bill. So it's a double whammy there, right? You're thinking about opportunity cost. You want to move your money from something that's slow and underperforming to something that you think is going to go quick, right? And then you can tax loss harvest at the same time. It's like a really big benefit there. So you actually reduce your tax bill. Honestly, if you're doing this stuff well, there's ways to compound your money at a really, really high rate, beating the S&P 500. And then at the end of the financial year, you got no gain. You got no taxes to pay, or like, much less. Um, so there is people as well, like where it looks like you're making a lot of money, but if you're buying and selling, really, really quickly, trading, that's why I'm not the biggest fan of trading. Because you got the short-term capital gains. You got to be careful with that stuff. And if you're buying and selling a million times, that's creating so many taxable events. Back in the early days, I thought like, hey, you put $1,000 into an account, you take a trade, you close the trade at 1.5K, and then I thought there was no tax due. Every time you press buy and then sell, you've crystallized it, right? You've locked it in. Whenever you lock it in, that's a taxable event. I thought like you only pay tax when you withdrew profits into your bank account. How silly. How silly. So, a lot of people, I think, especially on the internet, we got to start getting into the mindset of start talking in terms of like, what is your ROI after tax? You know, post tax, not pre tax, post. There's a lot of people out there where they're like, hey, I made 20%. Yeah, you short term trading? No, brother. If you're short term trading, what's your tax bill? You got hit bloody hard. I've been there. I've been there. When I calculated, post tax, it's like, well, I could have just kept my money in the S&P 500 and done and paid no taxes. I actually, once I accounted for taxes, I underperformed the S&P. Right? It's actually really, really hard to outperform the S&P 500. It's hard to outperform it in just in terms of raw performance. Like if the S&P is making 10 or 11%, and you make 13, that's great. But then your tax, in terms of taxes, you might only be making 9, right? So then, like, what was the point? And then you actually wasted your time. You were actually working. The great thing about the S&P 500 is you don't actually have to work, right? So you save your time. So what I'm currently doing with my money is, yeah, I'm just chopping all the losses. And I'm just gonna put my money where my mouth is. And I believe China is looking textbook. I'm looking at Bubba, I'm looking at Tencent. Yeah, there's a lot of talk and all of that news, negative news happening at the moment with China, the tariffs, America, all of this stuff. There's a lot of uncertainty, but there always is. Well, and when I'm looking at the charts, like all I can see is, well, the evidence is China is holding up pretty damn strong. Obviously, this can change, but I'm willing to allow this to fluctuate in this range here. And I think as long as this is Tencent, as long as Tencent is holding above like 480, it's pretty textbook to me. It can even come down to 430. I wouldn't get scared down there. Um, and I'm just looking at Bubba as well. Same thing with Bubba. You're just in this range here. It's what's that, 125 to like 150, whole number of 150. As long as you're cooking up there, I think it's really great. So I wanna give my losses a little snip, give them that little choppity chop, and then I wanna move them into load up a little bit. I want to go a little bit overweight China, a little bit more than what I'd usually. And then the way I'm thinking about that is like I have my long term allocation to China, but then I want to go a little bit overweight for the short term as a little bit of a more short and medium term trade. And when I say trade, I'm always talking in still multiple years. A long term investment for me is multiple decades. A trade for myself, it's more of like a swing trade. It's still multiple years. That's still my definition. So I don't think I'm just like buying and selling like on a daily basis or weekly basis or even monthly basis. I'm willing to sit on these things for a few months, but yeah, like I was saying at the start of the video, if that thing hasn't moved for a whole year now, I'm still in a loss, I then have to reevaluate. Would I take the position? Would I buy in now at these levels if I had fresh cash? If not, it's better to cut the loss, tax loss harvest, reduce your taxes, lock in the loss, crystallize it, and then move it to something that you think you'll go faster. So overall, based on my current portfolio and where I'm, uh, where everything is currently at, for me, I think, yeah, I don't mind loading up a little bit Bubba and a little bit of Tencent here. It's looking quite nice to me. Um, another example is let's just say like you bought in at the price here and it went down over the course of a year, then you're thinking about chopping it. But it's like if you're a long term investor and there's like some crazy support down here, you don't really want to sell at the supports, right? So you don't really want to sell down there. Um, so yeah, you just gotta weigh it up. Like sometimes there's times where it's like, all right, the price action has shown that it's like invalidated. When it's invalidated, cut it, right? Or if like you got like a high, there's a high probability that it's still actually cheap. It's actually good, but I still would rather chop it and move it to something that's faster, right? Tax loss harvest, lock in the loss, move it to something that can go quicker. Opportunity cost. That's how you generate your ROI. That's how you outperform the S&P 500. You'll be thinking about this type of stuff. All right, guys, that's a little bit of transparency for you. Take a look at the eToro portfolio. You'll see some of those numbers change. And yeah, that's how I'm thinking. I'm thinking, let's go to where we should be able to hopefully make a little bit more money a little bit quicker. Thanks, guys, for this video. I'll see you in the next one.